Hey everyone, Scott Kuru here with another daily property update coming to you from Remuera Golf Course, Auckland, New Zealand. Let's go. So first it was the RBA governor. She came out last week and admitted it. And now just a week later, even the prime minister has actually been forced. He's been arm wrestled into admitting it too, finally. And this is the part that actually blows my mind. These politicians, they're finally admitting their mistakes. They're admitting their blunders. They're admitting that the policies they rolled out to win elections, the ones they said would fix housing, are actually falling apart, are actually doing the opposite of what they sold it to be. So hang with me here because I'm going to show you what the PM just admitted and also what the RBA's own numbers are saying and what the big banks are now forecasting for the years ahead. And mate, it's not looking good for Aussies trying to buy a home. Now let's look at what's already happening. Prices are on the move again. July up 0.6%, August 0.7%, September 0.8%. Now we predicted this mini boom a long time ago. Check the links below. Check some of these videos where we've talked about this and we've warned this, and a lot of course creators, buyers agents, fake online gurus have totally missed it. Every month, it's going higher and higher. This is the fastest growth we've seen in nearly 2 years. Nationally, the median house price is now about $857,000. That's an $18,000 jump in just one quarter. And it's not just one city. Perth is up 4%. Remember when all the online gurus said Perth was done? It's only getting started. Brisbane's up 3.5%. Even Sydney jumped 1% in a single month. Now here's the kicker, guys. There are record low listings, hardly any homes for sale. So not only do we have a constraint and a bottleneck on new supply, new constructed property coming onto the market, but the existing stock, people are holding it tight. They're not selling. There's nothing out there to buy. And what does this do to property prices? It sends them up. There are hardly any homes for sale, but demand is through the roof. And when you've got not enough supply and way too much demand, what happens? Prices go up every single time. And then comes the Prime Minister. Albanese was asked directly about the new deposit scheme, the one that went live on October 1st, where you can buy, which is a 5% deposit. And he finally admitted, he said,
it will have a minimal impact. There will be a slight increase in prices.
Said, yes, it will push prices up. You're trying to brush it off as a slight increase, but it doesn't matter how you spin it. Even the PM now admits his own scheme is going to make housing less affordable. Think about that. For months, they've been saying this will help young Aussies get in, and now he's standing there saying, well, yeah, it's going to make prices go higher. Critics are saying the same thing, that the scheme has blown out. It's just not targeted anymore. It could cost taxpayers $60 billion down the line. But the real point is this: if the PM is admitting it, you know the problem is real. Now let's take a look at the RBA's warning. And don't forget, a week before that, even the RBA governor, Michelle Bullock, came out and said it too. The RBA's own modeling shows the 5% deposit scheme could push house prices up another 1 to 2%. But that's all house prices. But when you look at the affordable end, we're talking 5 to 10%, okay? So now we've got the Prime Minister saying it, we've got the Reserve Bank saying it, and nobody, not one of them, is saying this is going to make homes cheaper. Not one. But don't forget, guys, they're only saying 1 to 2%. That is false and fake. It's 1 to 2% across the whole property market. But this mixes in premium properties, multi-million-dollar properties. Affordable properties are going to jump 5 to 10%. Now, first-time buyers are actually flooding in, and you can already see it happening. First-time buyers are charging into the market with just a 5% deposit. They don't want to miss out. But here's the problem. They're all competing for the same handful of properties. That creates a bidding war, and that drives prices up. So yes, it helps a few people get in now, but in the long run, it makes it harder for everyone else. That's the trap. And now even the banks are shifting their forecast. AMP has revised their outlook. They're saying house prices are up 7% this year, then 8% to 10% next year. Westpac's the same. They reckon 10% growth in 2026. So if you're sitting there waiting for a crash, the banks are literally telling you, don't hold your breath. They're saying we're headed into another boom. In fact, we're in the mini boom now. And then look at interest rates. The RBA just held the cash rate at 3.6%. But don't forget, they've already cut 3 times this year. Borrowing power is up 7% since February. We keep talking about the next rate cuts. Forget the next rate cuts, guys. 3 cuts in 6 months, guys, has already happened. Now, confidence is back off the back of these cuts. Consumer sentiment is up more than 12% compared to a year ago. Wages are finally running ahead of inflation and unemployment is still low. So what do you think that means? More buyers with more money, all chasing fewer homes. prices up. Simple as that. So here's the bottom line, guys. Prices are already rising faster every month. 0.6, 0.7, 0.8. The Prime Minister has admitted his new scheme will push prices higher. The RBA governor has said the same thing. First-time buyers are flooding the market with a 5% deposit, and the big banks are forecasting another 10% rise by 2026. This isn't fixing the housing crisis, it's adding fuel to it, and the longer this goes on, the harder it's going to be for everyday Aussies to get into the market. That's the truth. Nobody wanted to admit. Now they're being forced to admit it. Guys, this is your daily property update. Make sure to hit the like button and subscribe so that you can get your property update every single day so that you can be a property insider.